Okay, back again with real money trades for my masterclass over at simpleswitch.teachable.com. If you go over there and take my masterclass, it will get you up to speed on what I'm doing with this real money trading series, growing a small account in the futures market and with swing trading. And I chose the futures market to go with this because I don't have to worry about the PDT rule and I can day trade. In my masterclass, I take you from day one to I want to be a trader, then selecting a broker, opening an account, then teaching you how I build winning strategies that fits you. So I call it the PLG, personality, lifestyle, and goals. But not just that, strategies that have a proven statistical probability of success. Once we build our strategies, then we build a trade plan to go with those strategies. Two completely different things, traders. You need a good strategy and a good trade plan to be successful. Then I sim trade those strategies, and now we're into the real money trading portion of building a winning strategy. That is what this series is about. I plan on trading these accounts until the end of 2023, and we'll see how far we can grow them in 1 year's time. Now, I don't know if these strategies are going to be successful. We're going to find this out together, and if they're not, hopefully I can tweak them along the way to make them successful. I started my futures account with $1,700 because that was the bare minimum I felt like I could start with. And then I started my swing trading account with $2,000. Again, I felt that was the bare minimum I can start with. In my masterclass, I explain all these details and why I make the decisions, what you're seeing on the screens, the charts that you're seeing, all the tools, all that stuff. This class can benefit beginner traders and pro traders alike. I do trade with my algorithm, but you don't need that in order to benefit from my masterclass. You can trade with whatever tool it is for you. If you're thinking about taking somebody else's class, my masterclass can help you choose what other strategy might be right for you. This way, if you're going to spend a lot of money to buy somebody else's strategy, it would really be good if that strategy would fit you. And I teach you all about that in my masterclass, so go check it out. But for now, let's get into today's video. All right, so we just jumped into MGC in the futures market on the 15-minute candle trading with red light, green light. So we are now short MGC, one contract. We're actually going to bump that up, sell it. What? Oh, there we go. Okay, bumping it up. There we go. So now we're in two contracts. A little late on that second contract. I should have bought two right from the get-go, but I screwed it up. So here we are, and mistakes get made all the time, traders, in your order entry, especially when you're new and you haven't been trading for, at all. Order entry mistakes will be pretty common for you, or you'll be in a hurry, you'll get flustered, whatever it might be, you're distracted, and you'll make order entry mistakes. That's why it's good to trade in the sim for a very long time, get really good at that, so that your mistakes become tiny when you're trading with real money. So there it is. So we're in here, and we'll put in our OCO order next. Okay, so I took the show the trades on the chart off so we can clearly see what's happening with these candles. So I put my stop just above market structure here, which you can see going straight across here. If it wants to break back above that, it's probably going higher, and then we'll speed bump it. Right now we got our target down here, so I'm going to go ahead and adjust this for a speed bump. So a speed bump is basically when I reverse my trade on the once it hits my stop. So on Thinkorswim, you right-click, cancel, replace order, and then you can make an adjustment to it. So now we're going to go to 2. Because I only have 1, so when it buys 1 to get out, it also buy another 1 to get back in. Then we go to 4 contracts because I have 2 now, so basically it will buy the 2 that I have, getting me out of the trade, and then buy me 2 more. So confirm, send. Down here I didn't put the right number in, so cancel and replace. I'm going to add 1 more because I have 2 contracts, and then confirm and send. So there we go. So our order's all in, we're good to go. So now what I could do, I could just set this and forget it and walk away. But because I'm going to sit on my computer doing other work, I'm going to go ahead and drag this way down here. No specific reason that be at that number, just giving myself plenty of room. I'm going to put create an alert, single, at or below, and create. So once this thing gets down here and hits this target, my computer will make a noise. It'll also text my phone and let me know, and then I can go ahead and adjust my order so I could try to squeeze some more out. But if I was just going to leave and not have access to be able to adjust my trade, then I would just leave this there and set it, forget it, and be good to go. So there we go. So there's MGC. Trade is in. We'll see what it does. I'll bring the conclusion to you. All right, so that was fast. That thing was dumping pretty hard. So Now I missed my opportunity to get the exact target that I was looking for. That's not good. What I am going to do is I'm going to come up here. I'm just going to cancel this. I'm going to cancel that. And I'm going to 2 contracts. I'm going to go to my break-even area. Because you never know. As fast as it went down, it could go back up. So let's go ahead and lock in some profit. Okay, put my stop back in. So this way I'm not going to take a loss on this trade anymore. And I'm going to give this thing a chance to go ahead and keep on dunking. So right now it came down pretty fast, but I think it's still got plenty of room to go before it gets into any kind of major support or resistance areas. Let's take a look. Well, we're at the bottom of this one, so I'd take that back. So we do have a good support area right here. You can see that. And now we just hit that same support area. So does it bounce from here and go back higher, or we break that support area? That's the question. So we'll find out. I'm going to go give it a little bit. I believe it'll at least give that a good test. If not on this candle, the next one. This candle is going to close here in like a minute and a half. So I would expect it to do what it's doing right now, because typically, see, you have these tails or wicks. Wicks I usually say at the top, but shadows or tails you have at the bottom. And then usually you have wicks on the top, right? So, basically the candle doesn't usually open and then go straight one direction and then close at its, at its peak. Usually it has that flow that happens, which creates these wicks and these tails. So perfectly normal. I would expect this to do what it's doing. The next candle, when it opens, we'll see what happens here. So where will it go if it breaks through this? It could come all the way back down to this area here, which is what I'm looking for. Somewhere in this 1928 area. It could be the next spot that it finds some support, some legs. Wow, this thing's going to close almost at its peak. Like, it's going to make a fool out of me. I just said it doesn't usually close at its peak. And right now it's going to do that in 6 seconds. So let's go back a little further and let's take a look at the trade from the other day. Here's our trades from the other day. And you can see where I told you that this area was some, there's going to be some major stuff taking place here. And then this is the next spot right here, right? So we took our trade, made our money right here, came in. Yes, I could have took more, but look, it did come all the way back. It hit this next spot, bounced all the way back up, broke through here. I'm surprised it recovered like it did. Recovered, came back up, and then this candle went back into this area again and rejected. So clearly this area is really strong. Lots of stuff going on down in here. And just want to kind of give you a little snapshot of how all that played out that you saw on the previous videos. So now we're back in here. Will this want to come all the way back down into this area here? And maybe not. We're about to find out. So let's zoom in a little bit. And let's see. Once it gets down to the 20, 27, 28 area, then we're back into that same zone as before. So we'll see what it does here. Okay, so this didn't go up first, which is making me a little nervous because it's not going to make a wick. So is it going to make a tail first and then come up and close green? So let's go ahead and take this and bring it down, and let's lock in our profit. So we're going to lock in some profit and then some. So I'm not going to be too greedy on this. We're already back. We're already down to the 1930 area. Wow. All right, I'll take my bonus money from here. That's a good little bonus. I'll take that. Let's go ahead and draw this just to show you. All right, so we're out of that trade. We're out of that trade. So if I draw this like this, 1R would have been down here. We would have got an extra R out of it. But instead we got a quarter, so that's awesome. See, look what I told you, right? It went down first, makes me nervous. Is it going to come all the way back up, make a wick, or make a tail, and then go green, right? So if it would have went up first, then I would have been more confident to stay in this and let it ride. But because it went down first, not sure. It likes to make a lot of tails. So, yeah, definitely looks like it did the right thing. So let's see, where exactly did we get out? Put it on the chart. Okay, trades are on the chart. We got a 19.37. All right, cool. So that's a good little quarter bonus. So that's awesome. And it makes up for the times you saw my stop was up here a little bit higher. So these little extra wins like that make up for those times that I put my stop a little higher than my algo is telling me, so I can be above market structure. And by doing that, it allows And by taking these little extra wins like this, it allows me to account for that. So in the end, my math works out to where I'm basically risking one to make one, even though sometimes I risk more and sometimes I make more. It all averages out. Look at this. I told you. See, if I would have went up first, I wouldn't have been so worried about that. But usually it likes to make those tails. So, yep. Good call. Good call. All right, let's go to the My Strategy Manager and see how this is helping us out. Maybe, just maybe, we're scaling up. Okay, so here we are in the My Strategy Manager. This was our target, 1932, which was about $4. We were risking $4.90. So let's put the new number in. We got out at 1930.7. So now we end up making $5.30 when we're risking $4.90. So that's awesome. It's always nice when you're making more than you're risking in the end. So pretty sweet. After commissions, we'll take that $96. Let's go check out the scaling ladder. Let's see. Do we get to scale up? Not yet. almost. We're like what? Like probably $10 away. Come on. So we're almost there. So we got another green bar in there. One more green bar. We get to go to the $200 zone. So scaling ladder is extremely important, traders. Please learn how to make these properly, not just arbitrarily like, hey, I'm just going to throw a bunch of numbers on here. No, these are numbers for a very specific reason. It goes exactly like this. So if it didn't go exactly like this, I would probably blow up my account. So definitely, don't just make a scaling ladder of what you want to do. Make a scaling ladder of what's realistic, that's going to follow your risk management, that's going to protect your account, at the same time allow you to grow it as quickly as possible. And that's kind of the tough balance. Allow you to grow your account as quickly as possible and protect your account. Sometimes those two things kind of are a mental struggle. So make sure you're making these correctly. And again, over at my master class, I do teach, this is part of my risk management strategy, how I make my scaling ladders and why. All that information is over there. All right, so let's go back over to the futures trade. Futures trading. Let's go up to the top of the page. So we started this account with $1,700. We've now made $1,091. So our account after commissions, and so our account now after commissions is $2,791. Pretty awesome. With Thinkorswim, I've paid $85 in commissions so far. So far this account's going fantastic, and that's just this year, 2023. So there's a little bit of this account that had carried over $518 right here on the first day in January from last time. Those commissions are not reflected here, so that's not in there. But this is an account that carried over. So let's go over to the dashboard. Here we are in the month of January. Again, the money that was carried over on day one was $1,900 total, because this is combined between the swing trading and the futures trading, because we are trading the strategies that we built in the master class, so that you can see how you go through, learn to be a trader, build your own strategy that fits you, your personality, your lifestyle, and your goals. That fits you. You have to trade you. Don't trade them, because two traders can have the same strategy. One of them is a millionaire and one of them is living on the street because they lost everything. So, and it's all because of your personality, your lifestyle, and goals, your PLG. And I go over all that in my master class, because that's one of the most important things to trading. So once you get, and there's like a whole worksheet and everything like that that goes with it, so you can really hone it in. And then once you get that honed in, then you can figure out what strategy is really right for you. So if you didn't want to trade with anything that I'm teaching you and you wanted to go buy somebody else's strategy, my masterclass would help you determine what strategy could be right for you. Not will be right for you, could be right for you. Circumstances change, and you don't really know what's going to happen until you get in there and start doing it. But at least you'll be armed with as much information as possible. So with the personality, lifestyle, and goals, we were able to build several strategies and then trade them. And that's basically what you're watching here in these real money trades. So for January, you can minus this 1900 from 2756, and that's where we're at in the month of January. Over here, combined accounts. So we started a combined account total of $3,700, and now we're at $6,456. I can't wait till this gets doubled. And then we'll double it again and double it again, and that becomes exponential. When you're doubling at $100, it doesn't feel like a lot, right? Like, oh, I made 100. I put 100 in and I made 100. I got $200. Whoop-de-doo. What can I do with that? I can't pay the bills with that. I can barely buy gas for that. But when you're doubling and you get to like $10,000, now it's 20, and that 20 becomes 40, 80. You know, when you're at 100, it becomes 2, 4, so 8. So next thing you know, you got $1 million and you're doubling millions. So it gets exciting once you get into bigger numbers. But in the beginning, it's really hard to stay motivated in the sense like, because, you know, you're not paying the bills, you're doing all this work, and you still don't have any money to show for it really, other than what's here on paper. So that's the hardest part when you first start trading. But once you start doubling and you start doing all of that, and you can start taking a nice big paycheck, and you know that 50 you made 50 on it, and you pull that 50 out to go do something fun with it, you know, or you made 100 or 200, and you're like, oh, I think I'm gonna go buy another house, you know, then it becomes pretty exciting. So in the beginning though, when you're like doubling $50 or $20, it's not as nearly as exciting. So anyway, so our combined accounts doing pretty awesome. Swing trade account still doing good down here. If you want to see it stand alone, we started with $2,000. We're at $3,665 in the account, and we've made $1,665 so far in swing trading. So everything's growing perfectly normal and as expected, right on target, if you will, to have an awesome year. So we'll bring the next trade to you as it sets up. Let's go look at MGC one more time so you can see why you don't get greedy. And yeah, let's go look at it real quick. All right, there it is, right? Did I call that or did I call it? So I do not like to trade based on technical analysis alone because it's too subjective and it opens you up to confirmation bias. That was my kryptonite. I was never successful trading. Like I would have successful runs and I would grow accounts, double accounts, and blow them up because of technical analysis. And when I trade with that alone, it just makes me a failed trader. And I think a lot of traders have that same problem because of the subjective viewpoints and confirmation bias that goes with technical analysis. Candlestick patterns are the same thing because there's so many variations, you know. If you say, you know, a candle with a big wick like this one means a certain thing, well, then you have another candle with a big wick that is a little bit shorter, or the body's a little bigger, or it came after 2 green candles instead of 1 green candle, right? See, there's all these variables now that could change. So when you think you have a statistical proven probability of success, you have to have constant variables that are equal to measure against. If any of those variables are constantly changing, then you can't measure it because they're always different. And then when they're always different, you can't really get a solid, accurate measurement of what the probabilities are it's going to happen in the future. So even dojis, a doji, if you're not familiar, it's something like this right here, where you have equal up and down. It closes gray. It's not green or red. That typically is a symbol of indecision, right? So traders didn't know if it was going up or down. Like the bulls and the bears had to make a draw at the end of the day and, you know, call it a tie. So a lot of people will say a doji is a signal of a trend change. It's going a different direction. Right now we're going up. A doji would be a signal of it going back down, but that's not what happened here. So then they say, well, it has to be confirmed by the next candle. Okay. But this doji, what if the wick was up here and all the way down here? Or what if this wick up here was way high and the other one wasn't as high? Or what if it was really tiny? How does that affect it? If one wick is, 10% and one, it's like all these variables go into that doji. Now, do those have an effect on that? And does that change the probability? The next candle, okay, it confirms or doesn't confirm. Does the type of candle, the size, the percentages, and all that stuff, does any of that matter? So when you get in technical analysis, it becomes really difficult to get a solid, consistent data point that you can then use to have that proven statistical probability of success that you can then trade against. So I don't like to use technicals as my only go-to in order to get in and out at a specific number because of that. So trend lines and all that stuff, they constantly can change. It's so easy. Like you see on my charts all the time, like, is this the trend? Is that the trend? Where's the trend? So, because it changes from one candle to the next, right? So that's why I need something to trade against. And I trade against my algo is what I use. But it doesn't have to be an algo. It could be a lot of different things. Technical indicators, people say they're lagging. But if they're based on a consistent data point, they can be really helpful to have a statistical proven probability of success. So if you want to trade on a moving average or the VWAP or RSI or whatever, if you can use those to help you get those consistent data points to then have a proven statistical probability of success, that you can then create a trading strategy around based on your personality, your lifestyle, and your goals, your PLG. Now you're getting somewhere, right? So I go thoroughly through this entire thing of how to build a winning strategy. There's so much more to it, but it's a process, and going through that process I think is absolutely important and critical to be a successful trader. And that is what I teach in my master class, The Markets My Way, breaking the rules to win. Because I believe all the rules that are out there, the common rules that people are teaching and that you find on YouTube and Google and everywhere else, I think they're designed to make you fail. You know, when I was following those rules, I was a failed trader. And when I started breaking those rules, I became successful. So my master class is based on all that. There's so much information in that class. Go over there, check it out, simpleswitch.teachable.com. See you in the next video.